Hello, everyone, and welcome to another edition of the Forex Technical Market Update for June 26, 2015. It's a final day of the week. It's a wonderful Friday, and I hope you all had a good week and will be looking forward to the weekend. Okay, in front of us, we have a daily chart of the euro, and we're still in consolidation. It's consolidation city here in the euro, and the market, the euro is slightly down on the day, but the market is still in this broader consolidation pattern on the daily chart. Day traders, scalpers should be having a good time playing these ranges because the market is not really trending very much in the euro. But that's not the case in the currency pair where I've been highlighting over the last couple of months, the British pound, Australian dollar. We see that the market is in a broad uptrend and made a new high today. And there's always opportunities to get aboard these moves. And let's just analyze what happened. We have a market that was in a channel. The market came back down, tested this region at 202.67. And what did we see? We saw a bullish candle right here. It's a 4-hour chart of the British pound versus Australian dollar. Market came, tested this low. We had a bullish candle, and the market took off from there and is currently punching through the old high of 205.50. So when you have a market that's trending, always look for opportunities to get aboard the trend, and there shouldn't really be any doubt as to which direction to trade this market, because if we're in a broader uptrend, we should be looking for more buying opportunities as opposed to selling opportunities. And this was a perfect buying opportunity in the British pound, Australian dollar. Taking a look at the British pound versus the euro, we are testing the low. We're testing this trend line here that you can see started in March, came back in May, and the market is now challenging this trend line here. And a break below this trend line will ultimately challenge this region above 70 cents with the British pound versus the euro. So that's what we're looking for in this market. And as you can see, trend lines can be very powerful because the market, this would be the trend line here. And then the market challenged the trend line, failed. You got a sell signal at this trend line, and the market continued down. One thing, if you're looking for these support and resistance areas to trade off of them, it's important that you trade on closed candles. So for example, if you are trading the 4-hour chart, you wait for the candlestick to actually close, and don't jump aboard before the candle actually closes. That's a common mistake traders make. If you are trading these levels, for example, the 4-hour chart we just spoke about, British pound, Australian dollar, we have to wait until the market close. So on the close of this candle, this was where we had the buy signal. This was the buy signal, and then you will enter on the buy signal. And notice if you enter this trade, the market didn't immediately go your way. And oftentimes I see traders, they enter a trade, the market goes against them slightly, and then they get panicky and exit the market. If you had your stop loss below this channel here, what you should do, or a good strategy, is just to leave your stop and don't watch these ticks, because the market could come down and challenge the area again. And if you get scared and exit the market, you would have then missed this huge up move. So once you have the stop, let the stop work for you. Okay, taking a look at gold, we are we're we are seeing a doji candle with the gold market, but curiously, we see that Australian dollar is down pretty significantly on the day so far, and I suspect next week we may see this market challenge this 76-cent level. Remember, we have been speaking about the fact that this 76 level is critical support in the Australian dollar, and we could see a challenge next week, coming up next week with the Australian dollar. And because the Australian dollar is down heavy today, and the British pound is pretty much unchanged on the day, it's the British pound. That's why we have the British pound versus the Australian dollar is up so much, because Australian dollar is down, the British pound is really unchanged. So the cross is rallying. Okay, taking a look at our Japanese yen, the market. Let me just draw the Fibonacci retracement. Market pulled back to just above the 50% Fibonacci retracement and is currently attempting to rally. This rally is not very strong so far, but the market is attempting to rally. And the next area of resistance will be the previous high that was made in early June at this 125.88 level. We're still at 123.91 as of this recording, so we have a couple hundred pips before we hit this 125.88 level. Finally, let me take a look at the British pound, and we see that we're unchanged on the day, but we have support in the British pound at 156.50, and resistance in the pound is at this previous high, as you can see, and this level is approximately 159.30. Okay, and looking for next week, we're going to see if the market can take out the high in the pound, this high. We're seeing if the market can take out this high, but if we get continued strength in the US dollar, we could see the pound decline from here. So next week will be very interesting to see where the market goes. Okay, I hope you all enjoy your weekend. Remember, if you want the signals sent to your trading account automatically, you can click on the link below and get started, so you can be up and running for Monday morning, so you can benefit from these trades being sent to your account automatically. Okay, thank you very much for listening. This is Beyond. Have a good weekend. Thanks.